Alrighty, welcome to the live stream. My name is Kyle. Here is Dan Frio. So we are both federally licensed loan officers, licensed in all 50 states. And we're going to answer your questions that you have about home buying today. We're also going to talk about what's going on with interest rates, new home sales being up as well. So Dan's going to cover what's happening on the economic side. Already have a couple people in here. So if you have a question, you can just put it in the chat and then we'll bring it up here on the screen. So we have Max Law is in here. Amanda, good to see you as well.
Amanda's back.
I learned so much from these live streams. Really appreciate the knowledge you all have to offer. And Amanda has been like consistently on here for, man, how many streams has Amanda been on here? Quite a few.
A lot.
We have Logan on here, Steven, Anshu, I believe. Cool. Oh, you said you guys are helping first-time homebuyers immensely and understand the basics and useful tips. Well, thanks. Really appreciate it. So yeah, leave your questions here in the chat and we'll answer them. Let's see. Do you want to go into what's going on with rates, economic data? We have
I'll just touch briefly on what's happened over the last couple weeks. So if you see these bags under my eyes, it's for a reason. Everything is right now pivoting on the Fed. What's the Fed going to do? Are they going to reduce, increase rates or everything? I pretty much think there's no chance that they're going to increase rates again. They're going to continue to let I think it was 12 rate increases that they did kind of take its toll eventually. But, the data that keeps coming in is a little kind of contrarian. And what I mean by that is, every time the Federal Reserve mentions, we might cut rates, you see the stock market go up 1,000 points. You see mortgage rates and interest rates plummet. That's what the Federal Reserve can't do. Okay. So what's been happening is they've been signaling that the markets rally. And I truly think that a lot of people, they watch their 401ks, they watch all the other stuff, and they're like, well, financially, I'm okay. The markets aren't crashing. Back in 2008, when the world kind of imploded, you had the stock market down 50%. 50% at that time. So if you had money in the bank, you were, or in stocks and bonds, you were losing that. You're losing values on your home. You're losing values everywhere. In today's market, we have, there's a lot of people making tons of money in Bitcoin. There's a lot of people making money in the markets. The S&P last year up 25%, 25%. That's the top companies in the country and what they're doing. So if you're earning 25% on your money, you don't feel like you're poor. Okay. So that's what's happening a lot of times behind the scenes. And so what's everything's pivoting around at this point is what the Federal Reserve is going to do and when. The when part keep getting kicked out because the data that's coming in, like we had some data coming in today, durable goods orders, and they were supposed to be kind of somewhat flat and they were up 2%. So that means, buyers keep buying this stuff. But the one area that nobody really paid attention to today is there's a core X
TikTok
like
getting
number
banned.
when it, what's that?
Crashing the market because TikTok got banned.
Oh yeah, but there's a report that comes out that's part of the durable goods orders, and they strip out some data like defense spending, government spending, and when they stripped out that data, the numbers were dismal. So there might be a lot of government spending as well. Then on another flip coin is we're seeing rates kind of just staying where they are because there's too much bonds out there in the market. Yesterday was the biggest government bond auction in history. That means the government, they need that much more money. Okay. So that's why you hear me complain about student loan forgiveness and all this other stuff. I'm not against students going to school and, getting financing for it, but they should pay for it, not the taxpayer. So when, the government comes in right now and they keep forgiving things and giving money away and so forth, that's adding to, we don't have the money. Thus, we have a federal deficit. So what the government has to do is they have to create more money. And how do they do that or bring in more money? They sell bonds. And yesterday was the biggest bond selling in history. That's not good because when you flood the market with something, anything, even houses that we saw in 2008, you flood the market with too many homes. What happens? That market crashes. Okay. So you have this in the bond market. You have way too many bonds in the market. It's crashing the prices and jacking up the yields. So you have all these dynamics taking place. Now, next week, the Federal Reserve's meeting, Yeah, I was on kind of the fence probably about 6 months ago that this might be the first meeting that they're going to cut. And now it's not only me. So you guys, a lot of people point at me and say, Dan, you don't know what you're talking about, whatever. Even people on the Federal Reserve, the Federal Reserve themselves, they came out in December, Federal Chairman Powell, and he said, we're most likely going to cut rates 3 times in 2024. And that was created and validated through the dot plot. Well, they're now pulling that data away. So even at the Federal Reserve's levels, they're talking about keeping rates higher for longer. And I think that that's what they're going to do, because the consumer, you guys, you watching right now, you might say, well, I'm tight. I'm a little bit hurting right now, but the average consumer just keeps spending and spending and spending. And that's the biggest dilemma that we have right now. And then you have conflict in the Middle East and all this other stuff, what was driving oil prices up. And if you're in the market, you should follow what's going on with oil prices, because that's a good indication of where inflation's going. And then another dynamic, just for those out there that really want to study the markets, is pay attention to logistics, shipping. If you will start watching shipping, trucking, and shipping, with boats and stuff like that. If you watch the dynamics there, how much is going, or what the rate is on shipments, because if the rates are going up, that means there's a lot more things being shipped. So if you focus in on that, you can basically see where the economy is going from there. And shipping rates are pretty darn high right now. So there's still a huge demand out there for products, and that's not good news for the Fed. So that's
do you want to answer this
bad news for
question?
now.
You want to answer this question from Stephen? Saying, do you think the Fed will cut less than 3 times?
I do. And at this point, I don't see. Here's the problem: is as the data comes in now, all we need is 1 data point or 2 data points. We already have data. You got to look at, everybody was saying, well, the Federal Reserve, what they did isn't working. Well, last year about this time, we had inflation at 9%. Okay, today it's like 3.1. So there was a huge cut. So now what's happening is it's just stagnant right there. And there's a lot of reasons for it. You look at the biggest piece of this equation is shelter and housing. Well, you have homeowners insurance up 27% since last year. Okay. You have real estate taxes up. Okay, just those 2 dynamics alone is going to cause shelter housing prices to go up or be elevated. So you're not having that shelter number dropping, which is 40% of the CPI of the inflation numbers. So that's a huge piece of this puzzle that a lot of people didn't expect. Who in their right mind would have thought homeowners insurance would go up 25% or 27% across the board over the past, in a 1-year time frame? It's never happened. So these are a lot of dynamics that people, you need to pay attention to. That's why I do a video every day. I know Kyle does. He educates you guys out there with, programs and grant programs and, why to do this and how to do this. I want you guys to be on the forefront of, what the market's doing, especially with interest rates and the whys behind it. So if you're a realtor out there, you should be watching my channel on a daily basis. And if you're out there looking to buy a house, pay attention to the channel just so you can monitor, find out what programs to use. We have 3 grant programs that are fantastic right now that many people are using, but many people don't even know about it. So I do a video every day to keep you in tune of, you watch me for 5, 6, 7 minutes. You're going to get all the information you need. Now, I'm not going out there saying you have to buy a house or you'd be an idiot to buy a house. I'm just telling you, here's the tools for you to use when you're deciding, should you and your family buy a house? And that's all I'm providing you. I just want to give you the information to make a decision for you and your family that's financially prudent.
This person said 9 weeks ago, our loan officer told us we could purchase at $385 with 20% down and be under $2,500 a month in payment. And then 6.8%, now $2,800 a month at 7.2%. Cedar Rapids. Yeah, that's been a real issue for people who are looking for homes. Maybe they've already been pre-qualified and they're out searching, is that as rates do go up, it does start to change your purchasing power. At the same monthly payment, you can afford less of a home. And so that's an issue that a lot of people are running into recently. Sam said, what are those 3 grant programs? I close on Friday and I think maybe I missed out. Well, if you close on Friday, unfortunately, you won't be able to use them. But we can kind of just cover maybe really quickly. I don't want to go super in depth on the grant finder because we have a lot of questions in here that we still haven't answered, but I can pull that up really quickly if you want to jump into that. So we do have 3 grants for conventional loans. So I'll run through this very quickly. It's on the website, winthehouseyoulove.com. You just go to Tools and then Grant Finder. So I'll zoom in here so it's a little easier to see. Basically, what you do is you go through here, and I'm going to go through this quickly again. Just answer these questions, and it's going to help you see which of the 3 grants could you qualify for. You don't have to live in one of these areas to qualify for one of the grants, but 2 of them require that you live in one of these areas. So tons of different areas. We're finding way more people qualify than we initially thought, because I think there's somewhere above 12,000 qualifying areas throughout the U.S. that qualify. So you go in through here. Again, I'm not going to go through all of this so we don't spend too much time on it. But I just want to get to the final screen here that shows you the different grant options. So we have one that gives a 2% grant based on the purchase price. We have one that gives $5,250, and then one that gives you $10,000. And so it shows you which ones match your profile. And then, of course, you're going to want to choose the one that gives you the highest amount. You can't combine them. So if I was this person, I would choose the Home Ready First one with the $10,000. And then this one also gives you up to $500 in an appraisal credit and $500 in a home warranty credit. And kind of the big question I think a lot of people ask is like, why? There's no way this is real. Who's giving away money for free like this? And basically what happens is there's Community Reinvestment Act funds that are available from the federal government. And basically lenders get incentivized to give loans, and they can take advantage of these credits that are given at the end of the year. And so basically what happened is there's a lot of these Community Reinvestment Act funds available that haven't been used, these credits that lenders can take advantage of. And so you have wholesale lenders that are allowing people like us to do loans and to offer these grants. And these are fully forgivable. There's no repayment on the grants. There's no interest rate on the grants. And you can sell or refinance at any time, and that money is never recaptured. So check that out. And let's jump into some questions here. Logan said, what's rates for land loans looking like? Dan, do you know off the top of your head?
Nope. Unfortunately, we don't do land loans. I'm not trying to be short and sweet to the point, but the best advice, I got actually a couple of those questions today alone. Call your local community bank. And they're most likely going to have a program for you. That's why they're there. They're a community bank to lend in the area. And that's specifically one of the reasons why they're there. So check them out. We don't do land loans, and I don't know of any bank specifically that does them, or otherwise I'd say, hey, call this place, but we don't deal in those. So my apologies.
Is this a buyer's market or a seller's market? We've been largely in a seller's market for a long time. However, it's important to remember that the U.S. is huge, and it's not really valuable to just talk about what's happening.
Kyle, what's Dayton, Ohio doing right now? Is it a seller's market or a buyer's market? Hey, just throwing it out there for this one. It might be a promo for Altos.
Yep, that's what I was going to.
I don't know if you want to just keep showing promos, but take it away.
Yeah, so it's just not helpful to always just. I think people want to just talk about the national market, and there's all these different neighborhoods have different market tendencies. So what we like to look at is Altos research. So you go to product and then market reports. You then click run report. I'm going to take this off screen real quick so it doesn't autofill my address in there. So
if you guys check out the chat, I'll put in Kyle's address here later. You guys can stop by, bring him a beer.
Right. Let's see. I was going to put in, did they say which one it was? I was going to put in Chicago and take a look at that. Let's see. Of course, it's making me sign up real quick. It's always fun. Okay.
The tough thing, even in Chicago, there's like 100 different zip codes.
Yeah, so it's usually best to take a look at more specific zip codes. I just put in Chicago, and obviously it's going to be huge to look at all of Chicago. You want to start narrowing into the little pockets. But it shows you with this little kind of dial if it's either a seller's market or a buyer's market, so you can see slight seller's advantage. and then see a lot of trends with what's happening in that market. And so this is a really good tool to kind of figure out where the markets you're looking at are at, if they're buyers or sellers market. Ron said I tried to call you a couple of times, Dan, but wasn't able to connect. Ron, I did put Dan's email in the chat here, so if you want to go ahead and shoot him an email, he'll be able to get back to you.
Hey, and I apologize, guys. Here's what's taking place with us right now. Last week we were really short-staffed because of spring break, and then also, I don't know if anybody recognized this, but we're no longer with Allied First Bank. We are with Serve Bank. We didn't make a move. We actually the bank got bought out by Serve Bank, which is now, I think, one of the country's largest mortgage servicers. So we're still a federal company. Kyle and I are licensed in every state. But we're still brokering loans, same company, same everything. But during the transition, we had people out on spring break. We were moving files over, computer systems, everything, phone systems, the whole works. And I apologize. If you put in an application or you had to schedule a calendar or a consultation for like a week or two, please just call us. We'll post the 800 number up through here. Please call, because we are full staff again. I worked last night till 9:00 trying to get myself updated and current, and the whole staff is here. So by hopefully the end of today or tomorrow, we will be fully up to speed. So if you need me for anything, just email me. I promise you I'll call you back, or just call in the 800 number we have and ask for Dan, Alan, or David.
Here, I'll put it in the chat. There we go. I can't really put it up here on the fly.
Yeah. So that's our 800 number. Feel free to call in. Even if you put in an application, you're scheduled your consultation, and it's a week out, and you're like, I really like to look at houses this weekend, give us a call, please.
DDS Curtis said, first live stream, thanks for your great info. Well, thanks for being here. Moxie said, I know that none of us have a crystal ball, but when do you think the interest rates will come down, and what percentage will unfreeze the market?
I'm kind of going to go with the stapled approach to this, what everybody's using. But here's I'll take it this way. I'll just try to. I'm thinking, inflation's coming down. Shelter prices are stagnant. House prices keep ticking up a little bit. Others are contrarian with that. So I don't like coming out here and saying what's happening with home values and prices, because I could be completely off my rocker. Some say the market's crashing. Some say it's doing okay. Use the Altos research and figure out what your market's doing. On the economic front, the Fed's in a really bad spot. And like I said, I think inflation's come quite a bit down. It's kind of sticky or stuck where it is. If it was a normal market, I think they would be already cutting. The problem is they're sitting on this bubble that's been created. And now even corporate earnings are being determined by what the Federal Reserve's next move going to do. So we all think, okay, this is kind of tough, figuring out our financials, based on trying to buy a house or whatever. Think of companies that are out there just like, I don't know what my servicing costs are going to be. So I hate to say it this way, the whole world is being affected right now by Fed policy. So my thought is, if you look at it this way, inflation was up at 9%, okay? Even if inflation stays there, okay, what happens is over time, it's basically going to be, inflation will come back down to, I won't say it's zero, but it'd be zero. So what I mean is inflation went up to 9%. Let's say it's stagnant from there. If you take a 12-month average from, if you went from 4 to 9 and you take a 12-month average, well, the average is going to be, up here. But over time, the averages are going to come down. I know that was pretty cool. I don't know how you did that. So
it took me way too long to put that in there.
So what I'm going to do is I'm going to say, rates are going to be, here's my expectations. I see rates at 6.5% at the end of the year, going to stay steady there. The Federal Reserve is going to be really cautious. They're probably going to cut 2 times. Most of it's going to be at the latter part of the year. It is an election time, and that's what you're going to see. But mortgage rates should be at this time right about 6.5%. And as markets normalize, they'll ease back down to 6. When that's going to be, I don't know. I'm going to say a year from now, you should start seeing 6 to 6.5%.
I think we're gonna have to keep that crystal ball as a recurring character here.
That was really cool.
It took way too long. I was like, he's gonna finish the question before I can get this in bed.
Do you understand what I'm trying to say? Is I don't know how to explain it. In my head, I get it. If you have a price of something, automatically just spike all of a sudden. When you look at that number, it's huge. But then as you look at that number over time, it gets diluted. So if you went from 0 to 9, it's a huge gain. But then you go, as time goes on, and let's say inflation is at 2%, but when you average that 9 into it, where we were, 8 months ago, you're going to get 5 or 6% inflation. So as these numbers kind of go longer in duration, you're going to see a lot of the inflation numbers kind of start coming down just because of the time frame that we're in. Never mind. I get it up here. So just go with my words and you guys will be safe.
Inma, thanks for being here again. How often do deals fall off after an offer is accepted during the closing process? I'm currently back up for an accepted offer and was wondering if I should wait or just look for something else. I haven't seen a lot of people put in a backup offer that ends up working out. I think it's absolutely something you can still do, is putting in a backup offer, but I don't think deals fall through enough for that to be I would have my expectations low that deal would go through. So I would still be looking for something if it were me personally. Colton said first time on the stream. Wow, we have a lot of people who are new on the stream here. If you are new, if this is first time for you, let us know in the comments. I'd love to see who else is new here.
What's our logo? What's our logo? Like thumbs up or a house? What do we do? It's not guac. Can't steal that. House.
I don't remember what it was.
Yeah. If you guys like what we say, put up a little house icon. I don't know. Just thinking of something to do.
Whoop. James Jones. Hey Dan, as flight attendant Southwest just voted on our new contract and it passed by 81%. Going to get a paycheck with the new money and we'll be in contact soon.
Perfect. God willing, I'll be here waiting for you.
Did you see that? Who was it? FTC just banned non-compete in contracts.
Oh, really?
Yeah, basically you can't have any sort of non-compete clause in a contract anymore.
No kidding. Yeah. In this business, it's tough. You had a lot of people that would change companies and things like that, and then they get sued. And it's like, well, what am I supposed to do? I've been in the mortgage business for 30 years, and now you're saying I can't work in the mortgage business.
Yeah, I don't know how that was ever okay, because how can you prevent someone from doing something they've been doing for years? It's kind of wild. If we have good lenders incentives, where should we be spending them? With around 7+% rates and buying down points, not sure if we need to refi in 1 to 1.5 years mostly. Excess incentive will lapse, sadly.
Can we take it?
Yeah,
I know exactly what I would not, in this market, I would not buy down the rate permanently. You can do what's called a 2-1 buy down, a 3-2-1 buy down, a 1-1 buy down. So basically all you're doing is you're saying the 2-1 buy down means this. You're buying down the rate for basically 2 years, okay? Or you're buying down the payment for 2 years. The rate gets allocated. Kyle can just show you right on the screen. Why you want to use this program is because any money that's unearned would get refunded back at you through your payoff. Okay. So if anybody that wants to learn about this, would you mind going through this real quick and we can show them the numbers and the cost of it? And then I'll explain to them, why do it this way instead of doing a permanent buy down.
Yeah. So this is just on our website under the 2-1 buy down calculator. Basically, let's say we're looking at a home. Let's say it's $350,000 and you're going to do 5% down. And we're looking at, let's say, a 7.375% rate. Like Dan was mentioning, a 2-1 buy down, and I know someone else asked about temporary versus permanent buy downs. This is called a temporary buy down, where basically it kind of simulates a lower rate in the first 2 years. So why it's called 2-1 is because in year 1, your interest rate is lower by 2%. In year 2, it's lower by 1%. So 2-1. And so what this shows you is let's go to year 3 first. Year 3 through 30, it's going to be fixed rate of that 7.375%. So you'd have a payment on this loan of $2,296 per month. This is just principal and interest. So in year 1, though, it's going to be $435 per month less. It's going to be $1,862 per month. So effectively, you're having a 5.375 rate. In year 2, you're getting a 6.375. And then in year 3, it goes back to the normal rate. So it basically lowers your payment in the beginning. And this money is coming from either the seller or the builder. So this has to be negotiated upfront in your purchase contract. So for instance, for this situation, you would need the seller or builder to give you just above $7,800 to make this work. And so what happens is the lender takes that money, puts it into a little kind of like a separate little savings account, for instance. And what they do is each month they apply a little bit in a payment to that payment with you to help it lower. So it's only for those first 2 years with a 2-1 buy down. And like Dan was mentioning, is let's say that you get this, and then all of a sudden let's say in 12 months, you want to refinance because let's say rates lowered at that point, there would be $2,666 remaining in that account, and that money goes back to you. So it's money that you get back versus permanent points. You never get that money back. You really are kind of hoping that over time, your monthly savings is greater than how much you paid in upfront points. So I'm trying to think if there's anything else in here.
Yeah, so the reason why you would do this is we're in an environment where mortgage rates are at a 25, 30, or 40-year high. So even the Fed's saying, eventually we're going to cut rates. Okay, so if we're in an environment right now where rates were 2, we wouldn't be talking about this anyways. And let's say they were 3 or 4. I'd be like, if you got extra money, just buy down the rate permanently because the rate's fantastic. But in this case, we don't know, but we're pretty confident that within the next year or so, rates are going to come down, giving you an opportunity to refinance. So this is a way to be able to take advantage of the lower payments over time, but not lose all the money by buying down the rate permanently. And then once you do refinance, you'll hopefully get a little kicker check back to you. It could be $2,000 like we said in here, but that $2,000 can cover all your refinance closing costs plus. So it's a great way to use that money right now because most of these credits, it's use it or lose it. So you don't want to lose it.
Another good thing you could use the incentive for too is just something like a home warranty. That could be something else that you add in there as well. That I think a lot of people kind of forget about is having a home warranty can be really beneficial, especially for some of those bigger issues like a furnace going out or something like that, that a lot of people will forget about home warranty. And they're usually only about $500. There's like different packages that home warranty companies have, but kind of a middle of the road one around $500 can really help you out. Rebecca said, hi, my husband and I are hoping to buy our first home within a year. Our apartment lease ends March 1st. So we're trying to navigate when to officially start the home buying process. Ends March 1st
of 2025.
I'm assuming so.
Yeah, you're within a year. Yeah, that would be more. It's April, so that'd be 11 months from now. Go ahead. I'm sorry.
Oh no, you're good.
Early. Yeah.
It is a little early. I would say you could probably start probably around the beginning of the year might be a good time to go ahead and reach out. That way we can kind of take a look at where you're at. Because when you go through a pre-qualification, you don't have to buy immediately. And it can be really good to take a look at where you're at, and we can see, is there any roadblocks in the way that we need to address before you get in, you go through the rest of the process. Because what a lot of people do is they find a house and they're like, I need that house, and they're not approved. And then they try to rush everything. And then they're wondering why they're so stressed during the process. It's like, well, you waited till the last minute and try to make everything happen at midnight, and it doesn't work super well that way. So I'd say around the beginning of the year, we can take a look at a pre-qualification and see where you're at. And then we can always refresh the pre-qualification if it takes you a little bit longer to find a house.
Yeah.
Greg said, hello, Dan. My new home should be done in December or January. I plan on renting my current home for around $600 a month loss. The new home is $600,000, but our mortgage info is a bit tricky.
Just email me, and I'd love to help walk you through it. So my email, is there a way to pop up my email?
Yes.
Sorry. Kyle's also the techie guy behind the scenes. He's the producer, the editor.
Yeah, I think at the end of our live streams, we need to have one of those movie credits, and it's just like the same person over and
Kyle,
over again.
Kyle.
Dan at therateupdate.com is what you're looking for there. Chris said, we're on contract for a new build closing around the end of August. Definitely nervous about rates. Totally get it. A realtor named House said, howdy.
Howdy. Hey, Adam.
Adam M. House. Is that your real name?
That is awesome if that's it.
That's fun.
Thanks for joining. We appreciate we're trying to put together, we're pondering a channel just for realtors to kind of educate you guys on just mortgage products and just things you don't know about that maybe set you a little bit apart from the rest. So maybe if there's any realtors in there, give us any comments that you might, on what kind of channel you might be looking for and what kind of, I guess, educational pieces or advice you might be looking for. We'd love to help.
Would you say interest rates are comparable between homes and land, or do you think land would have a higher rate? Land loans are going to be riskier just because they're harder to sell. So you're going to expect a higher down payment and usually a higher interest rate. Given rates stay steady for the remainder of the year, how does it impact home prices in the short term?
Right. Honestly, right now, we had a fantastic month. Things started slowing down for some reason, but I think we're probably going to we'll have a little bit better of the year than last year because I think people are getting a little more, I won't say more more happy with it. They're accepting these higher payments now, and maybe I think a lot of people are buying smaller homes. When you see your friends buying these $500,000, $600,000, $700,000 homes when rates were 3, and you're like, how do they do this? Because your payment would be twice or 3 times what they're paying. I think a lot of people just come to it's a reality that I just can't buy that big of a home. So I think the reality is starting to really come in that prices aren't crashing like many people have said and continue to say. And, interest rates are just, I won't say they're stable. They were 8%. I guess they're stable. They were 8% in October and they're 7.3 or 4 now. So I guess they would be stabilized. But the tough thing is everybody, we get calls daily for people shopping. And, one of the comments that we get notoriously is, well, Kyle, most of the videos Kyle has, he is advising us to, get 3, 4, 5, quotes. And Kyle's right here, so we can have him speak on that behalf. But we try to educate people. Kyle used to be several years ago, he wasn't with our team. So what he would do is he'd say, just get, and he didn't know a huge amount. He knows a ton about the business, but I don't think he really took the concept of, if you're working with a broker versus a bank. So if you're working with a broker in these days, maybe you want to get 2 quotes, but you don't need to have, 10 different quotes. The reason why is, many lenders, like the $10,000 grant program we have, I've lost probably 5 borrowers that were approved with that program, but their lender or their other lender that they got pre-qualified with said that the program does not exist. The realtor says it doesn't exist, never heard of it, but we have it. So that's where I think a lot of times the not having the right information or all the information, plays a role. But what we do now is what we're trying to do is help as many people as we can, so you don't have to keep shopping around. Here's what I was going to get to. Last Friday alone, mortgage rates went up 0.25% in one day within 24 hours. So if you got a quote the day before, from 3 or 4 places, then you started getting quotes again on Friday. You're looking back saying, well, these rates are terrible. The rates from, I got those other banks from yesterday are fantastic. You call them back and now their rates are worse than the ones you got on Friday. So now you're just sitting there chasing your tail. What we do is we can have, it's one application and one credit pool, and we're going to shop your loans with tons of different lenders. And so you no longer really have to, get pre-approved with 20 different places. Get approved. If you want to get approved with somebody, get approved with somebody, and then come to us. Make sure it's their best foot forward. Then come to us, give us what they're offering you. Let's see if we can beat it. If we can even match it, I'm going to say, go with that bank if you want, because they helped you out at the beginning. But if we can't, I'm hoping that we can beat the rate and also beat the fees. And if we can, we'd love to have you as a customer. That was a long one. I'm sorry.
Should have thrown this up there. That little passive aggressive timer.
No, maybe
Um,
somebody wants to sponsor me. Just saying.
yeah,
If
you
anybody
think we can
knows
get that
anybody at
Diet
Coke
Coke?
that knows that maybe they can get me a sponsor, just I'll drink one every event if you want me to.
Didn't realize you were a Diet Coke girly, Dan.
Yeah, I already had 2 cups of coffee, as you could tell from today.
Steffi. Not Stephanie, Steffi. Hey guys, how long can a house stay in pending status, and can an offer be put in on a house that is in pending status? Thanks. And there's the guac.
There's the
Um,
guac.
there's no limit to how long a home can stay in pending status. When you're seeing pending, you're probably seeing it on Zillow or Realtor.com or something like that. And those aren't always updated kind of in real time. Sometimes they can take a little bit of time. And for those who aren't familiar, pending just means that somebody wrote an offer on a home and the seller accepted it. So they're now under contract to be able to purchase that home. So you can put in what's called a backup offer. You can have your agent reach out to the seller's agent and say, hey, are you guys accepting backup offers? And if so, we'd like to put one in. And basically a backup offer is, if the current offer falls through, then they would entertain your offer as a backup. But like we were talking about earlier in the stream, it's not something I would bank on working out, and I would still continue looking for other houses.
Great answer.
Sammy, you said, how should a first-time home? And okay, here's the rest of your question, because I wasn't sure how to answer that. First, Mariana said, first I'm here. You're heaven sent. Love your insights. Well, thanks for being here.
Thanks.
Sammy said, how should a first-time homebuyer cost analyze a permanent buy down versus a temporary buy down? Context: we're first-time homebuyers, probably keeping the property for 10 years at least. I have a real neurotic problem where I make calculators for everything in my life, and it's a real issue at this point.
And I can validate that. Every time I need something, I'm like, I'll just call Kyle. Dude, you got a calculator? Oh, yeah, I haven't used this one in a while. And he sends it over to me.
Yeah, I do have one called the Loan. Hello. I did show the 2-1 buy down calculator earlier. This is an older version of my website that I need to update at some point. Basically, what this loan comparison calculator does is you put in different types of loans side by side, and it shows you which one is the best. So I was going to pull up some screenshots here. So this may be a good option for you to take a look at if you want to look at some permanent buy downs. Steven said, we've been a backup offer 3 times so far. No luck at this point. Yeah, unfortunately.
Here's what I want to make a point on this, because we have Steven, and Steven, you might be able to validate this. If you guys could let us know, how many of you have been pre-approved and you're having a really tough time getting your offer accepted? You put in the offer and you get outbid. You put in an offer, you get outbid. You put in an offer, you get outbid. If you guys could just, give us the number 1 over there. If you can just hit 1 and hit enter, let's see how many people can't buy a house because just you keep getting outbid. And
you know what I can do? We can create a poll.
Okay, you can create a poll.
All right, what's the question and how do we word this?
Have you had an offer? Have you had more than one offer? There we go.
The ones work. We'll save the poll for another time.
Yeah. I hope you get. So my point is if the market is terrible, and I get some areas are probably really bad, but a lot of the areas that we're looking into, and people were, I've had people just completely just say, I'm done. I'm just going to rent. I just can't find anything, because by the time I go and put a bid on a property that I can afford, there's 30 other ones and I can't buy it. So when you have that much pent up demand, we see it. That there, can there be a crash? I guess, but I don't see it. So let me ask anybody out there, if you give us a number 2, is your current market you're looking in, is the prices continuing to drop? Not once, but maybe 2 or 3 times in the past year that you saw, giving you maybe you're sitting on the sidelines just waiting for that price to drop to the point where you want to buy. So if that's you, give us a 2. But if you're out there and you've tried to put in, pre-approvals and you just keep getting outbid, give us a 1. And I'd like to see, what those dynamics look like.
Yeah, we need to use a poll for that at some point.
Sorry about that. I didn't know you could do a poll. That would be pretty cool.
Yeah, that's probably a little bit easier. Let's see.
Sorry about my lighting today, folks. I got computers all over my desk and I had to spin sideways.
Given the Fed keeps rates steady. Oh, we answered this one. That's just an edit. Okay. Hello, how are you guys doing? Do you think it will be worth locking in a 5.99% rate for June closing new construction FHA loan? Thank you, from Denver, Colorado. You want to take that?
Yeah. How many points, how much in fees are you paying? Okay. And this is another thing that you guys need to really be careful of. All right. Don't get inundated or completely induced by the rate. Okay. Because many times we get loan estimates from people every day. And the first thing is I'll scroll down, I'll see the rate and I'll be like, man, I don't know where they're getting this rate. And then I'll scroll down and it's like, oh, it's $15,000 to get that rate. Again, I'm not paying points in this market to buy down my rate permanently because I'm pretty confident that rates are going to drop in the next year. Okay. Will they, won't they? I don't know. As long as you can afford the house now, let's just take that as a little buffer if that does happen. But I would love to know on that, how much in fees, if you go to your loan estimate that they had to give you legally, go to page 2 at the top left, put in the number that you're seeing there, the dollar figure number, just so we can all see how much they're charging you in fees. Because if you're getting $599 with no points and no lender fees, that lock it, don't even look back and just keep moving forward. Don't even question it. It's a fantastic rate.
What is the best way to remove dispute remarks from credit reports? I called each agency 2 times and my mortgage company says it's still on there. Really, outside of calling them and asking them to remove the disputes, that's the only way that I am aware of to do that. I'm not aware of any way to do that faster. Are you?
No. And just so you guys know, just when you hire these companies to help you with your credit, and even a lot of people just tell you to do this, just go down and dispute everything. That'll get your scores up temporarily, maybe. But when you're going for a mortgage, just like you put in here, your mortgage company, we need those disputes removed. Because when the dispute goes on there, the algorithms in your credit score basically now don't really look at that data or that account. Now, when that dispute gets removed, your credit scores are going to go down. So that's what you have to be really leery of. Everybody just goes in and disputes everything. And it's like, oh, see, I got now a 700 credit score. When we remove those disputes, because you're going to have to, what's your credit score going to be now? So if you're going to go look for a mortgage, please get your disputes off of there and focus in on that credit score before you start moving forward, because that's what's going to be used.
Jonathan, have you seen someone buy down their rate and have a 2-1 buy down? It's not super common, but it's definitely something you can do. If you kind of want to do both strategies at once, that's perfectly fine.
If you have excess money, you can do what's called a 3-2-1 buy down, and that's for 3 years. So maybe do that. And then now you have 3 years for rates to come down. I'm pretty sure they're going to come down a little bit in 3 years. And then any of the money you pre-funded that with.
Wait. There we go. Okay.
Oh,
gotta have that crystal ball disclaimer in there.
Okay, let's see.
Yeah, a little bit more left. Wait, I can move it for you.
It's really hard.
I got you.
Okay, it's...
Ooh.
Yeah. We lost a whole bunch of viewers on that one. We can see a live ticker how many people was watching us. It just plummeted. So sorry, folks. Let's get back to the serious stuff.
Does a low down payment make our offer less attractive for the seller? Can you provide more info about this? I think we covered this last week a little bit. It depends on the contract. Sometimes a seller can see how much you're putting down, and sometimes they don't. Some contracts have that disclosed and other ones don't. I don't know why a seller personally would really care about the down payment, because the down payment doesn't impact the offer. Sometimes sellers can get really weird in competitive markets where they start to be like, how qualified are you? Like start to do these really strange things that we're judging buyers. Yes, it's possible that some sellers could say they want to take an offer that's 20% down instead of 5% down, even though that your down payment has zero impact on the seller whatsoever. And I also think it's provides some weird gray area of like discrimination against people like veterans who want to take advantage of like a 0% down VA loan. Really, though, what sellers care about more is the earnest money deposit on the contract. And this is money that's not required in every market, but in competitive markets on a home that has multiple offers, basically an earnest money deposit is kind of adding some skin in the game to the contract. It adds a little bit of risk. If you have no earnest money down on a contract and you decide to walk away from the home because you just don't like it anymore, then you didn't lose anything. What earnest money does is it protects the seller in the event that, let's say on the earnest money contract, or I'm sorry, on the contract you put down a few $1,000s in earnest money. If at some point during the contract you're just like, I don't want to do this anymore, there could be an option for the seller to hold on to that money versus you getting that back. And there's tons of different ways that you can exit a contract even with earnest money without losing the earnest money. This is where you want to talk with your real estate agent about different ways you can get out of your contract before you negotiate an offer. But that's what sellers care most about is earnest money, not your down payment. Exactly. And just to clarify too,
Amanda's probably asking why you didn't have a timer up. I mean, I wasn't thinking of it, but I knew she was. Just saying.
Should I run this down to like 5 seconds?
So if anybody's new here, each one of us, as you can see, we can talk a lot and we dive into these things. So what we start doing is saying each one of us has 1 minute to answer the questions and neither of us is any good at it. So just bear with us.
It's so hard. I mean, mortgage questions are so hard. And I think, Dan, I don't know if you've seen like other live streams with like real estate agents, and no hate to real estate agents. But often I feel like in live streams, a lot of times there are mortgage questions that are asked and real estate agents are just like, they'll give you like one sentence and like, wait, there's way more to consider here than that. Steven said, with a 20% down conventional loan, other than points and buy downs, are there other ways to get a lower rate? The only other way that would really be something worth looking at is if you go to winthehouseyoulove.com/rate hack. I have a list of the ways that conventional loans are priced. And this is with every lender across the nation. And basically this is a average of different rate change that you could see. So let's just say, for example, so you're doing 20% down. Let's say you had a 780 credit score. So you'd be looking at, again, I know this can be kind of hard to understand without being in the mortgage world, but basically what I would be looking at here is if I was in your situation, 20% down, 780 score, if you did 25% down, it would lower your interest rate by about 0.188% on average. Is what you'd be looking at. So additional 5% down could help lower your rate, but doing 30% down won't lower your rate anymore. Going 40% down, 70% down won't even lower your rate any further. On the opposite side, you could actually do 3% down and it would lower your rate by, I don't know what that math is, 0.188 minus 0.063. A very small change in rate that probably wouldn't be worth doing. But that's pretty much the only other thing I can think of that would be valuable to take a look at. We have a crystal ball request. Maybe that's what we need to do. We should have some request the crystal ball to come out. If we close,
if you guys want to ask me a question, you got to give a crystal ball next to it. That'll be it.
Maybe that's what we do. Yeah. All right, here we go. Here's our crystal ball. Okay, if we close at mid to low 6s in January of next year, I'm guessing, how long do you think it will take for it to be worth refinancing? Check your crystal ball.
I don't have. Okay, let me check.
Oh wait, yeah, I got you. Yeah, I'll follow you.
4 payments, 4 months and 17 days. That's what the crystal ball is telling me. Now let me.
Oh,
Now
God.
here's what I would
Okay,
tell
that's
you.
very
It,
specific.
it completely depends, and here's what I mean. If you have a $80,000 mortgage, you need the rate to probably drop about 2% to save any money. If your mortgage is six, seven, $800,000, even a 0.5% rate cut would help you. Refinancing doesn't cost as much money as a lot of people try to tell you. A lot of the YouTubers out there that you're preaching the crash stuff. They're like, okay, how they say all these guys are telling you to buy now and refinance later, and that'll help you. So buy. What did they say? Buy the house, rent the rate, or date the rate, or something like that.
Marry the
Yeah,
house, date the rate,
yeah.
something like that.
What was a question again? Could you pop the question back up there? I'm old, folks.
How long do you
So
think it will take to be worth refinancing?
you'd have to run a mortgage calculator, see how much in savings it would be. So take the rate at 6%, and then you can go to any amortization chart, any mortgage calculator, whatever, and put in, if you got 5%, what would the difference in your payment be? And is that enough to want you to refinance? Okay. So what I always think of too, you're going to skip one mortgage payment when you refinance. It's just how the system is built. So you most likely that house payment you're going to skip is going to be basically all the cost to refinance, because refinancing is usually pretty darn cheap. It's not like, what I was saying is a lot of the other, crash people, they'll say, well, yeah, then you're going to refinance. What are you going to spend $10,000 refinancing? No, it might cost you $1,200 to refinance. So that's what you'd have to look at the numbers to see when it makes sense. And then just back it in. So
Yeah.
I'll save $300 a month. I would do it, so that's what I would say.
I think what people get confused about when they refinance is that they have to start a new escrow account, and they don't realize that they get a check back from their previous escrow account balance. And so usually it evens out. So you kind of, for some people, will end up paying more, but it's just in their escrow account, and then they'll get a check back for what was in their escrow account or the previous escrow account. And so it evens out. But I think a lot of people forget that or aren't informed about that. There's a couple of crystal balls in there. Dylan, how's your crystal ball look different than everyone else's?
Come on, buddy. Share.
How do you have a special crystal ball?
That's pretty cool. Thanks, everybody.
JC
I appreciate
it. YouTube has its own. Okay, YouTube has its own set of emojis. Oh, you're right. Wow. Okay. How advantageous is an underwritten loan as a part of an offer in this market? So you can have a loan that is would be like a TBD underwrite. So basically, when you don't have a home yet, but you can do a full underwrite with an underwriter. They're not. I would only think they're super valuable in like a very, very competitive market. In most markets, you're not going to need a full underwrite. Some of the issues with the full underwrite primarily is that it can take a little bit longer to be able to get an approval on that. And really, as long as your loan officer is giving you a pre-qualification based on the documents that they have, if you're sending them your pay stubs and your tax returns and your bank account, then that's going to be a good approval, and you don't really need an underwriter to take a look at it at that point in time. And it still has to go back through underwriting anyway, because you're going to need a title report, you need insurance to be checked, and then also an appraisal needs to be done as well. So it doesn't usually save a ton of time compared to the upfront time it takes. Do you provide financing for investment properties? Yes, we do. We can do standard conventional investment properties, or like DSCR types, where we only look at the income, the rental income of the property, if you want to take a look at that. Yvonne, how is approved loan amount determined if I buy with my brother, but I make about 3 times more? Is it better for each of us to buy separate homes? Well, to touch on your last question, is it better for each of you to buy separate homes? If that's the question, should we buy separate homes or one home together? That's more of a lifestyle choice of, do you want to live together? But as far as a loan amount being approved, when there's two people on a loan, we look at both of their incomes and both of their monthly debts together as if they were one person, is how that is looked at for the max loan amount. Okay, A&R talk. I am putting 20% down on a pre-construction that I signed at a price of $364. They're not hitting me with random additional. Oh, they're now hitting me with random additional $55,000 in addition to closing costs for around the time I close in October. I asked for an itemization of these costs, and it's been a couple of weeks of no reply. What should I do? Oh my goodness. Do you have any advice there?
If you have an attorney, maybe. Probably if you're buying a house from a construction company, you don't. Here's what happens is they have to supply you, especially the lender, they have to supply you with estimates, loan estimates and things like that. If you've called the lender, you might even want to call the builder. I don't know how to answer on their behalf. I would just say, if you want to back up, please, check out, come to us. We'd love to get you pre-qualified. Unfortunately, even if we might be your secondary lender in case of a fallout, but at least you got to get yourself covered. So when you're ready to sign on that house, you know what you're getting. So for them to have this lackadaisical, here's what happens a lot of times. They won't answer you. So you'll go out and get financing. You'll get everything put in place. You'll freak out, do all this work. And then about 30 days from closing, they'll come back and say, hey, here's what we can offer you. We'll get you this rate with these great, fantastic credits and everything else. So come back to us and we'll take care of you. And usually that what they offer you is fantastic. But the frustration is you're freaking out. You had one or two other lenders working on this for you during this whole time frame to get you approved and answer your questions and do all that. And then they come in at the last minute, pull the rug, and then they take the loan. So that's the frustrating part. And that's really commonly what a lot of the builders do. And then they'll come in at the last minute and just swoop you out and take you because they'll offer you some great incentives to go with their company. But during the whole process, it was completely garbage.
Let's see. Oh, Miss Morgan said you both really make this hour at work fun. I'm glad that this is your idea of fun. Listening to us talk about mortgage guidelines for an hour. Let's see. We got lots of crystal balls in here. Ron had a question. When there are two borrowers, how is the credit score looked at? So usually most people have 3 credit scores. So we take each person's middle score, and then we use the lower of the 2 middle scores. That's the credit score that's going to be used for the loan. So it's a little bit weird how that's done. Stephen said, thank you for sharing your wealth of expertise with us today, gentlemen. And thanks for being here, Stephen. I appreciate it. Now, I know there were some questions that we couldn't answer, so I'm going to show you how you can ask us a question. I'll get to that here in just a second. But what we do a bad job of is actually kind of saying what we do. So we're federal loan officers. We work in all 50 states. And so through doing one credit pull, one application, we can shop your loan with 73 different lenders, and then help you see what you can qualify for. So the way that we do this is we don't want to chase you down and relentlessly call you like a lot of lenders will do. You get to schedule a call right on our calendar so you can see a time that works for you and a time that works for us. So when you schedule a call, it'll either be with Dan, who's right here below, or Alan Platt on our team, or David Pies on our team. And each of them have over 20 years of experience. So you'll be in good hands. You can ask questions just like you do on the live stream here. And what we do on the calls is try to see what's your goal with buying a house and how can we help you get there. So you don't have to know, I want an FHA loan and here's all the guidelines. You don't have to be a loan officer to be able to do this. We'll help you figure out what loans you can qualify for, which loan would be the best for you. And then through every call, we now run everyone through the grant finder. So if you haven't run through that on our website, we can do that on the call. And that's basically where we're trying to see, can you qualify for one of the 3 grants that we have that go up to $10,000. After that, we'll have you fill out a application. It takes about 15 minutes. We're just asking, hey, where do you work? How much money do you make? How much money do you plan on spending for a down payment? From there, we'll show you your quotes, what your interest rate looks like, your monthly payment, how much you qualify for. And then from there, you can shop for a home. That's when it's actually, you can hop on Zillow or talk with a real estate agent and actually say, oh, I actually think I want to go see that home. You find it, you love it, write an offer on it, and hopefully the seller accepts. Or there's no obligation. You don't have to go buy at any time. And all this is free. There's no cost involved with setting up a consultation. So thank you all for being here. Oh, I meant to say there's a way that you could reach out to us if we didn't answer your question. If you go to winthehouseyoulove.com, let me pull it up here. Oh, where is the button? Right here. You can click, I have a question here, and you can ask a question if we weren't able to answer it. And then you can also get pre-qualified right here and schedule a call with us. So thank you all for being here. We do this every single week, same time, same place, Wednesday at 3:30 Eastern. And we look forward to seeing you all next week.
Thanks so much for coming, guys. See ya.